General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work for Monday. New trading today. Just letting the range develop. Take a look at NASDAQ. Kind of respected the daily volume imbalance. I want to see some order pairing here. Maybe Tuesday, low of the week. I don't think we're going to go all the way down here, but this new week opening gap from week 1 is the next key level. We're going to H1. You see how we kind of sat on that daily volume imbalance right above the fair value for buy. This previous month's EQ. I don't think we're chopped there, but it is week 4, so we can't expect too much out of this month. Seeing how it is been so far, it hasn't really been super crazy, but did maybe rally up for NVIDIA because we got NVIDIA on Wednesday. I don't think we'll sell until after NVIDIA. Real close to fair value for buy. I don't want to see orders paired tomorrow. So this is more of a rotational day. The very first candle, and we just rotated inside all day. Not really much of any trading opportunity, price discovery, or anything. The buy is the most logical thing that made sense. Look at gold, which is super interesting. Kind of slowed down. Sam was talking today. He was saying the buyback starts September 10th, so that's like a couple of weeks. We'll see if it's super aggressive. Also, he was saying he's going to do all these super sanctions for Iran, but it wasn't very specific. It's more of just jawboning. Go on the hour chart. I don't see nothing bearish about this, but I would prefer to see order pairing. This is the last stop at level, right around the week opening gap. Just a little dip to buy. We already took previous week's high. It don't look bearish though. We have to close below here and respect this as resistance for me to be bearish. Right now we're still above this old daily. This is the old order block, I believe. On the M15, sitting on previous week's high. Super respected the new week opening gap and just rebalance the opening range gap all day. And this is NVIDIA. Got earnings Wednesday. I still like 232. I ain't scared of this drop. We got a cool little gap around 204. The dudes in Texas said to do today, like, he was worried about the data center. He kind of slowed it down. He was saying they ain't got the energy for it. So, got to keep an eye on that. That's going to be a key for NVIDIA. Fundamentally, everything's good, but just sentiment kind of beating it up right now. We go on the 15-minute. We got the 24-hour charts now. So we got Asia London. See how we swept London for New York on the stock chart. So it's going to be crazy with the kill zone. Everyone played out, yeah. We just want to see the range develop, start the week, try to find the anchor and try to find the swing. What did we learn? We watched Invested, seeing how he's trying to fight these battles with the yen, with Iran, and with the bond yields. He's an interesting case study. Tomorrow, looking for a rally on NVIDIA, watching gold, and see how the bonds act. Because if the bonds vigilantes get the call and they bluff, they're gonna be forced to show their hand. But the way it's setting up right now, all the bad stuff is scheduled for after the midterms. So I guess we just buy until then. All right, y'all. Y'all have a good day. Peace.